To me, the most basic, simple way of describing is that central banks aren't going to go back to buying treasuries and selling gold. I think that from here on out, you're going to see more turbulence, more volatility, sharper swings, but nothing's really changed. In fact, I just think you have to not get shaken out. The bull wants to take as few people along for the ride as possible, and you have to keep your perspective. They try and tell us that this was the Chinese dumping like 1 million ounces of gold. Let's just put that in perspective. So first of all, when we talk about Chinese gold-backed ETFs, in the month of April, they saw more inflows than all of 2024. And that's just in the first 11 days of the month. And when we talk about China dumping gold, first of all, their markets are closed right now until May 5th, which is very peculiar. In fact, this lends itself to making you think of conspiracy and of manipulation and of suppression during Chinese trading hours when their markets are closed. That's a clever trick. To me, that's very suspicious, to say the least. And Goldman Sachs' story is very suspicious. And I think the bullion banks were able to exploit the closures in the Chinese markets to smash the price. If you look at a chart, a continuous 24-hour chart, you see it go up every time it hits Chinese trading. It goes up and gets smashed as it comes into New York. Well, with all of the Chinese markets being closed until May 5th, suspicious. Goldman talked about a 31-ton dump, but they didn't make any delineation between the Shanghai Gold Exchange and the Shanghai Futures Exchange. So I did a little digging. The Shanghai Gold Exchange delivers less than 4 tons a day, right? And so, in essence, the majority, if not all of this dumping was done in the futures market. And so I think that's important here. You're not seeing physical gold being sold off. You're seeing futures being sold, and it's done for effect, for sure. Let's talk about what's happening here in the United States. We saw for the May contract in gold, 9,306 contracts stand for delivery. That's the second highest ever for a non-active delivery month. The silver May contract, 14,813 contracts stood for delivery. That's the second highest ever, just behind March's record delivery. And we're beginning to see these short positions that are closing their positions, and you knock it down, and you had a good way to close it. But it seems everything's settling for physical delivery. The other side of the short, the long, says, great, we'll stand for delivery, please. Who are those longs? We don't really know. But to me, this just exemplifies continued demand at the highest level. So I think people need to put things into perspective. It's been quite a run in gold. Silver hasn't begun to blow out from its technical formation. I suspect it will, and probably much more so than what we witnessed in gold. But I would just simply say that it's going to be bumpy, but nothing has changed, not even a little bit. And with the Fed meetings and all the things that are happening, I think perception, this was a perfect opportunity for, if I had to guess, the Western bullion banks to knock the hell out of the price, say it's the Chinese, even though their markets are closed, and do what they can to close out their short positions, or to settle things with metal that they're able to then physically buy on the cheap. So this doesn't bother me at all. It nothing goes straight up. It's certainly violent, but also put it in perspective. A $60 or $70 drop is 2%. So it's not a massive drop. The dollar numbers are higher than most us gold bugs really think about, because it hasn't been at these levels for very long. And when you're at 3,000 plus gold, a $300 move, well, it's still 10%, but it's a big one. But when you see $60 or $90 move, which really freaks people out, you're talking under 3%. So, yeah, you're going to see paper market volatility. That's just the bottom line. You're going to see that the higher the price goes. But I still think gold and silver will climb the wall of worry that everyone is freaking out about on social media right now. I mean, all of these things to me are peripheral noise. No, it's not. That doesn't change the structural problems that we have with the monetary system, with our indebtedness, with everything. But and we should hope for peace, certainly. But no, I don't think that changes anything at all. In fact, you could argue that when the war is over, you may see a larger, more concerted effort by the BRICS nations to focus on unity, to focus on trade. And we talked about last week, 40 plus countries have applied for the BRICS, Vietnam being the last, and their new payment system, which is now open to non-member nations. They haven't slowed down behind the scenes. They're just not as open about it anymore. And the Russian finance minister is all over the place, Lavrov, talking about this. And so peace is good, but it should not have anything really material to do, in my mind, with the price of gold. Really, it shouldn't. Even if it ended today, I don't see how it materially impacts the United States, the dollar, or any of the problems that are fiscally or monetarily in front of us. Yeah, I mean, well, I think 30, right in the 3,200-ish range, 3,200 would be that support level. And you could see it test 3,150. You could see it go all the way back to the 3,000 level and test it. But to me, nothing has changed. That's why, what I mean by the bull wants to take as few people along for the ride as possible. You have major big banks that need to close out these positions, big funds that need to close out these positions. And this will not go straight up without it being, I think, a very bumpy road. I really do believe that. And the greater the volatility, typically it precedes some sort of a major move higher. So this to me is all par for the course. But nothing's changed. I mean, truly, I believe nothing has changed. I think we'll all know when something has changed. To me, nothing at all has changed, not even a little bit. In some respects, it already is. It just hasn't. The monetary aspect of gold is what has been agreed upon by the central banks. But from a strategic standpoint, you could argue silver is just as valuable, and maybe that's why you see these 8 Western banks that have gone to such great lengths to suppress the paper price. But then again, you're seeing massive deliveries as well on COMEX. And when you see the open interest just fall by 10% yesterday, that signals that typically, to me, that signals that these contracts are getting closed out and are preparing to stand for delivery. So when there is a short, the long on the other side has the ability to stand for delivery. And when you see on the first day like that, it just massive drop in open interest, that to me are contracts that will stand for delivery. And again, we saw, a huge delivery. What did I say on that number? Huge delivery that we just saw. What was the number here? 14,813 contracts. It's the second highest ever. And if we multiply that times 5,000, well, that's 74 million? 74 million ounces of silver. 74 million, 74 million, 65,000 ounces of silver stood for delivery, just like that. And I think you're going to start to see silver leave the COMEX exchanges as well. And that's when you'll realize that this is getting really serious. But, this is a trend that hasn't stopped. We've seen more imports of gold into this country and to a lesser degree silver than at any time since the end of World War II, when everyone sent us their gold because of the Bretton Woods deal. So it's not just gold, it's also silver. And I think the people at the highest levels understand silver. There's a race to secure it, and I think they understand that it is strategic. It's not tier 1, so it doesn't have the same implications that gold does for the Basel III regulations. But when you see Russia and India and China and all of these countries on a mad dash for it, I think that people in the United States who are making the policy understand that as well. And that's why you're seeing so much brought into the country from London and from Switzerland.